Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, September 4th, 2013. And the last candle we're analysing here is the candle that's finally finished trading is this second last candle on the chart, not the small black body candle, this fairly large white body candle. So a continuation of the trend to the upside and some very solid bullishness coming back into this market after having been sold off down below the important 90-cent level, and then that area acting as resistance. For the two previous trading days we've seen fairly large white body candles, and it had been some time since we've seen white bodies of that size. Very, very solid bullish momentum here in net terms, with the buyers making a significant amount of net bullish progress on the day between the open and the close, but likely for the sellers to come back into this market. If we look at how the market reacted here, very similar type of trading candles, and the test to the 92.21 level, which has been a very important level, and I suggest that if the market does trade up there today, we may see strong selling come back in. But the difference here with this recent past is that the market is now also interacting with the bottom of the cloud, and we know that that can be a very strong area of resistance. And as this market's developing now, we are seeing a black body candle develop, and there's potential for the market to trade off. But having said that, this candle is very, very bullish. This current candle has finished trading. There is a possibility of the market testing back up to this 92.21 level. The market closed with the buyers in with very, very strong control and showing very strong commitment, and the sellers losing commitment around the Kijun Sen and the Tenkan Sen. So potential for the market to trade to higher levels, but if it does, we do need to watch 92.21. Now, in terms of the Fibonacci extension, a very, very bullish activity here, very strong bullish close up above the 261.8%, suggesting that there is potential for the market to trade to the 423.6% level. That's up around the 92.61 area, and a possibility of the market trading up there, but not likely with the solid resistance overhead. As I've mentioned, the area around these two peaks may act as very, very solid resistance. But if we do trade up above there in a bullish manner, we should be looking to the 92.61 level at the 423.6% Fibonacci level to hold as strong resistance. Similar activity with the Fibonacci retracement as well, bullish activity up above the 261.8% level, possibility of the market testing to the 423.6% level, which is roughly in the same area. So that strengthens the potential resistance up around 92.61 and suggests that the breakout and the solid bullish close up above the 261.8% level is significant. So there is a possibility of this market coming off, finding support somewhere, and then bouncing back up to higher levels. So let's be prepared for that to happen. In terms of Ichimoku, a market that's trading just within the cloud and has closed within the cloud, so suggesting a neutral market in big picture terms, and suggesting a very strong change in sentiment in this market. For quite some time we saw this market trading below the cloud, and very strongly below the cloud, and very strong downside momentum with this market in big picture terms. So we've changed sentiment in that long-term time frame of being a neutral market, and it does suggest that the market may be in a transition phase from bearish to eventually become bullish, but that transition could occur for quite some time. So we're not going to start buying this market in the long-term time frame at the moment. In terms of the Kijun Sen and Tenkan Sen, however, the market is trading above both of those indicators, suggesting a bullish market in the medium and fast-term time frames. And this is the second consecutive trading day that we have been trading above there. If we look back at the recent past, however, we did see similar activity. We even saw the market come off and find support at the Kijun Sen and then trade through there. So there is a possibility of that area holding as potential support. And both of those indicators are trading around the 90.38 level down to around the 90.32 level, so some solid support around there. Importantly, we've had a signal with the crossover of the Tenkan Sen above the Kijun Sen, giving us a bullish signal, a buy signal in terms of Ichimoku, but it's a very weak signal because it's occurred below the cloud, and this highlights well how or why it's a weak signal, and that's because the market has the opportunity to interact with the bottom of the cloud to find resistance. So not a high probability trade that is worth taking, and with this crossover for this trading day today, the market has met that resistance, so not a lot of confidence in that breakout. Also with the breakout above the Kijun-sen, which is a buy signal, it was a weak signal with the market trading below the cloud, but there still is a possibility of this market trading higher. Obviously 92.21 is very, very solid resistance for this market. The market trading within the cloud is significant and may hold a strong resistance. If the market does come off, potential support down around the 90.66 level, this previous minor swing high, then down around the roughly 90.40 down to 90.30 level where the Kijun-sen and Tenkan-sen are trading, and then at the round number 90 cent level we could find some very solid support. So not a market that we really want to be trading at the moment. For shorter time frames, yes, we have some good volatility in this market over the previous few trading days, but a very strong possibility of this market trading off.